So this is going to quite possibly be the only video you need to watch when it comes to trading on your phone. In this video, I'm going to be going over all of the trading objectives, what you need in order to be successful, and the things that you can do to help you get there. So, without further ado, let's jump into the video. So I will be going over onto the phone in just a second, but it's easier to showcase to you guys the trading objectives that you need first of all in order to better understand when we move onto the phone, because the phone's a little bit smaller and it's a little bit harder to see. So the first thing that you're going to need is a wonderful app called TradingView. This is where you're able to do all of your market analysis. You're able to draw your trend lines, support and resistance. You're able to add indicators. So TradingView up here, 100% is a really important thing to have, and this will help you with your trading and the strategy. The next thing we're going to be talking about is keeping things simple. Now, when I say simple, you're on a phone, it's very small. So if you've got 1,000 different indicators on there, you've got 1,000 different support and resistance zones, trend lines, moving averages, all of these things, it's going to make everything that you're doing significantly harder. So in order to keep things easier and clearer, we're going to be keeping everything simple for this strategy. The next thing we're going to be doing is having a clear direction. And when I say clear direction, what I'm talking about is market structure. Are we trending upwards? Are we trending downwards? What are we doing? Are we consolidating? Is it a choppy consolidation? We need to have a clear idea and direction of what the market wants to do. So if we are trending upwards, we're going to be looking for buys. If we're trending downwards, we're going to be looking for sells. If we're consolidating, we're not going to be entering the trade. And I've got a really good indicator to help you clear things up. So if you're unsure about the direction and you're unsure about the market movements, this will help you for sure. The last thing that we're going to be doing is having our phones on landscape, and this is just a little bit easier because it's all about perspective. If you've got your phone in portrait mode, things can look slightly skewed. So what we're going to be doing is we're going to be putting our phone in landscape mode, and I believe that it's a bit easier to judge about the direction. It's a bit easier to keep things simple. All of this helps when you're going with the strategy and trying to successfully trade from your phone. So the perfect strategy for your phone wouldn't be as perfect if you didn't have the perfect brokerage account to go with the perfect strategy. And that is why Longhorn FX is for you watching this video, because 95% of the people watching this video right now will be fairly new to trading. You're trading from your phone, so you probably don't have all the bells and whistles, and you don't want to spend too much money into something that you may not get anything out of. So this is why Longhorn FX is so perfect, because if you don't have a large sum of money to plow into trading, you might have bills, you might have children, you might have other commitments that you may need, you can use Longhorn FX to trade account sizes up to 500 times what it would be. So if you have a $500 deposit and you're trading with a 1 to 500 leverage, that means you're technically trading with the leverage of a £50,000 account. It's perfect for people who are getting into trading and don't have much capital. It is also perfect if you're trying to flip your trading account and you're trying to take £50 into £50,000, a 1 to 500 leverage is the way forward. If you're trying to flip £100 into £100,000, a 1 to 500 leverage is the way to go. Not only can you trade Forex, you can trade stocks, you can trade shares, you can trade crypto, you can download MT4 and connect your brokerage account to your MT4 account. They have free resources, you can do web traders. It is perfect. This is the place that you want to be trading from. So why not have a perfect broker with the perfect phone strategy? There will be a link to Longhorn FX down in the description below. So as I mentioned in the beginning, we're going to want to clearly identify market structure to best help you get some money out of the markets. Whether it's going upwards, downwards or sideways, we are going to want to first of all determine the trend and the market direction. Now, if you are newer to trading and you will struggle with this, I have the perfect tool to help you, and it is something called the moving average. This can help you determine whether the trend is going up, whether the trend is going down, or whether the trend is going sideways. So we're going to want to hit this little plus zone right down here, and then we're going to want to press indicators like so. And all you're going to want to do is searching moving average right here, and then all you're going to want to do is just find the moving average exponential. Then we're going to want to come out of that, click this up here, up to this top right area where it says EMA 9 close, SMA. We're going to want to hit that and then press the little settings button. So what we're going to want to do is first of all change the length from 9 to 50. Now what this does is it takes the last 50 candles and gives you an average price. Now when I say it takes the last 50 candles, of course the moving average is a delayed indicator, as are all indicators. They are slightly delayed. So when you're trading this, it can be impulsive moves like news events can be quite detrimental to this indicator specifically, because it could just snap right through or snap above or do something crazy because the indicator hasn't had time to take into account what price is doing. So the best advice that I can give while using this indicator and trading is avoid trading high impact news and times of high impact news. And for that, you can go to forexfactory.com. I've got a whole video on that. If you want to watch that after this video, there'll be a link down in the description. So all we want to do that is then we're going to want to go to SMA, we're going to want to change that to EMA, and then we're just going to want to change this to, once again, 50, like so. And then we're going to want to press OK. And then this, what it will do now is take the last 50 candles and give you an average movement of price. So what we're going to want to do to identify the price and what it's doing is, if price is below, if the candlesticks are below the moving average as they are here, that is a downtrend, so we're going to be looking for entries for a sell. If it's above price, which is what it is just over here, we're going to be looking for buys. And then when it's running through the middle, as it is here, what we're going to be want to do is just not stay in the market because there is not a clear direction. So it's all good having a moving average to identify the market direction. However, that is only probably 50% of the work, because once we've identified how the market is moving and what direction it is moving, we then need to identify how we're going to enter the market and how we're going to exit the market. Now to do that, thinking that we are on a smaller screen and we need to keep things simple and clear to help us best, all we're going to be using is simply support and resistance, and we're going to be looking for entries at support or exits at resistance, or potentially it could be vice versa if we're in a downtrend. So as I said, what we're going to be looking at is we're going to be looking at where the moving average is in conjunction with price action, and then we're going to be looking at where it is and what it's doing, what are specifically the candlesticks doing at our zones, at our support and at our resistance. So I'm just going to draw on a couple of zones that just really stick out to me right now. So we've got, first of all, this nice, quite big one over here at the top. So we're going to get our tool and get our rectangle out. And this seems like quite a nice area that price has come into before and shown some nice rejection. As you can see, what it's done is it's come in here, tested as resistance a few times, tried to push above, broke again, and then came back resistance again, and then fell. And then look at what happened. Price went below the moving average, and then we were looking for sells. So that's our first sort of major zone. And then probably the second major zone is probably these swing highs a bit closer to us, just over here. So as you can see, price is coming to here, into these zones like so. And it's come in, tested resistance slightly again and again, and then pushed up, but then rejected heavily. So this is a good area of resistance. So if we can get a break above this area, that's when we're going to be looking for our entries. if it's to the buy side. If it's not, if it's to the downside, what we're going to do is draw on a few more zones. Once again, we don't want to draw on too many because we want to keep things simple. Basically, we need to be dynamic. If price does this, we're going to do that. And there's one more last zone that I'm going to draw on just in case, and that is probably these cluster of lows down here. As you can see, we did have a brief spike down just here. However, price rallied up, created a higher high, and then continued. So now we've got our resistance zones drawn on and our support zones drawn on. All we're going to want to do is just be patient and wait to see what price action does. And when I mean price actions, all I'm talking about is the candlesticks. So as you can see right here, what's happened is we've pushed deep into this zone with this candle. We've closed quite bullish. As you can see, there's not much of a wick on this candle over here, okay? There's not much of a wick at all, which means that there are still quite a lot of buyers at this resistance zone. Despite it being a resistance zone and people are looking to sell, there are still quite a lot of buyers in this area because there's not a really big wick. Then we get our candlestick confirmation. So what do we have here? This candle here, the one that actually is the breakout candle, we saw a clean move to the upside. There's no wick to the downside and barely even a wick to the upside of this candle. So what does that tell us as traders? That tells us basically that in this candle, there is a lot of momentum pushing price even higher. Like I said, there's no wicks. So price didn't even, when it opened here, there were no sellers able to get in and it just pushed up and rallied. So this is what we're going to be doing. Is we're going to have our tool out, which is our long position. We're going to add it to here. Now, what you could do, okay, is put your stop loss just below resistance like this. Or, if you wanted to be a bit safer, you can pull it further down, like so, and have it just below the moving average. Because the moving average can be used as a dynamic support and resistance. And then what we're going to do is want to target up here, and it will give us almost a 1 to 2.12. Now, when using the moving average and support and resistance as stop loss points or take profit points, you're always going to want to remember, okay, that when we're using these to place our stop loss, if we was to place it below here, we was to get a negative risk to reward, we would not want to do that. We would want to have it either tighter or not enter the trade at all. Because then we've got a negative. If we've got a 1 to a 0.7, it means we're risking only 1%, but only to get 0.7% back, and that's no good. Anything above a 1 to 2 is sort of where you want to target when trading. So here, what we can see is price is pushed above the moving average, so we're looking for buys. Price has broken resistance cleanly with a nice bullish candle. Now, what we're going to want to be doing is we're going to want to be entering, like so, our stop loss below the moving average, which we've got. And then what we're going to want to be doing is targeting our next zone, which is the zone up here. Nice and simple. Price is above the moving average. It's broken above our resistance zone. That resistance is then turned into support. And now we're in an uptrend looking for buys because of our direction on the moving average. And what we're going to want to do is just play and see what happens. Like so. We did come briefly back into our zone, but what happened? The moving average was there and it's still here. Now, what you could do potentially is if you wanted to, you could take some risk off the table. You could move your stop loss to there because what's happened? There's your support zone there and your moving average price is here. So what you could potentially do is move it so you have a tighter stop loss so you're taking some risk off the table. So if it reverses on you, almost a 1 to 2, almost at take profit, you won't lose nearly as much. Or you could just sit and have it where it was and then just see what happens. So let's just say we've kept our stop loss there and we've moved it so we've taken some risk off the table. We're going to want to play it, see what happens, and price has absolutely smashed our take profit. What has happened here? Price is above the moving average, like so. The moving average can be acting as support or resistance dynamically because it moves. Okay, and what did we get? We got our entry, we got our exit. Now we're out of the trade for a 1 to 2 risk to reward ratio. Nice and simple, kept it easy, got the market direction, made our money, and we've got out the markets.